Federation Account Allocation Committee shares 739.9 billion naira. Central Bank of Nigeria flags off digital financial inclusion for women and youth in 6 states. Stocks rally in Nigeria. All share index crosses 42,000 points. This is Business Express, and we are reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. It's good to have you join us. The Federation Account Allocation Committee, FAC, has shared the sum of 739.9 billion naira to the 3 tiers of government as revenue generated in September 2021. A communique issued at the end of the virtual meeting of the FAC indicates that the 739.9 billion naira total distributable revenue comprised statutory revenue of 577.7 billion naira, value-added tax 159.096 billion naira, and exchange gain of 3.104 billion naira. According to the communique, in the month of September 2021, petroleum profit tax, oil and gas royalties, and excise duty increased significantly, while companies' income tax, value-added tax, and import duty decreased marginally. Value-added tax in September was lower by 7.659 billion naira over what was collected in August. In September 2021, the sum of 126.2 billion naira was the total deductions for cost of collection, statutory transfers, savings and refunds. The balance in the excess crude account was $60.860 million. In this drive to ensure the digital financial inclusion of women and youth across Nigeria, the Central Bank of Nigeria and its stakeholders are billed to engage target groups in selected states in order to facilitate their economic empowerment and inclusion. Statement from the CBN noted that the program also aims at implementing the bank's framework for advancing women's financial inclusion in Nigeria and improve access to financial products and services amongst vulnerable segments of the Nigerian society. The digital financial inclusion drive, scheduled to commence from Gombe State on Monday, November 1st through to Friday, November 5th, 2021, is the first of 6 engagements expected to cut across states with high numbers of financially excluded women and youth. The statement identified Bayelsa, Ebonyi, Jigawa, Niger, and Oyo as the other states with high populations of vulnerable financially excluded women and youths, adding that those who fall into these groups are expected to benefit from the drive throughout the rest of the year. Chairman of the Independent Corrupt Practices and Other Related Offences Commission, ICPC, Professor Bolaji Wasonui, has said the agency recovered 301 houses from 2 public offices in the Federal Capital Territory, FCT Abuja. The disclosure came at the inauguration of the House of Representatives Ad Hoc Committee on Investigation of the Operations of Real Estate Developers on Thursday. The ICPC chairman said while 241 buildings were recovered from one of the suspects at different locations within the FCT, the remaining 60 were recovered on a large expanse of land at another location. Wasonoe, who did not disclose the names of the affected civil servants, lamented the alarming rates at which corrupt public officers were using real estate investment as a vehicle for hiding ill-gotten wealth and money laundering in the country. He, however, accused officials of the Federal Capital Development Authority as collaborators in the scam. And now to Energy Director General of the Bureau of Public Enterprises, Mr. Alex Okor, has called for the establishment of energy sources and resources to supplement the limited power generation and supply in Nigeria, with only 40% of the country's over 200 million population currently has access to electricity. Okor, who made the call in Abuja, noted that Nigeria has abundant natural energy resources to address the power challenges bedeviling the country. The Director General said 12 small hydro plants were slated for concessions, which include 8 greenfields and 4 brownfields located in Adamawa, Benue, Kogi, Ogun and Taraba states, as well as the Federal Capital Territory, with a generation capacity of 1.2 megawatts to 1,500 megawatts. He added that the inauguration was in line with the mandate of the Bureau and as fallout of the recent federal government circular that provided clarity on the institutional framework for administration of concession in the country, which the Bureau successfully engaged the relevant federal ministries to get the buy-in. Stocks rallied in Nigeria, crossing the 42,000 point psychological work as predicted by market analysts. The all-share index ended the week at 42,038.6 points. Deals closed at 5,262. Volume of trade was 1.1 billion, value at 13.3 billion naira, with equity capitalization ending the week at a comfortable 21.9 trillion naira. And now Olufemi Balogun, Head Market Services at the Nigerian Exchange Limited, is our guest today, and he's joining us via Zoom. Mr. Olufemi, thanks for joining us.
Thanks for having me. It's a pleasure.
Okay, market data is today gaining the increasing importance in the global financial market. How pervasive will you say the use of market data is in the Nigerian capital market?
Market data basically drives investments, and in our market, it's gaining ground, and because of the information that you can get from the market data itself. It's not just the name of the security or the name of the company or the directors or holders and things like that. You can get past performance, price trends, and the fundamental factors of the security itself. And also globally, the consumption of market information, a market participant, actually fuel investment. And at the exchange, we have platforms where it makes it a lot easier for investors to get this information via our X data portal and our X fact book. And this actually paid opportunity for arbitrage because they have more than enough information, and thereby minimizing the risk of the portfolio and maximizing the value of it.
Okay, how much impact will derivatives market will have on the Nigerian economy and the capital markets?
Well, that's a very nice question. The derivative market continues to be the largest single segment of global financial market, and has been estimated that it's going to be 5 times larger than the global equity market. And even if you look at the activities of last year, there is almost from the World Federation of Exchanges that there's almost about 40 point something % increase in derivative activities. So it's obviously that it was going to impact the economy. And at the exchange, the imminent launch of derivative markets aligns with our commitment, to drive innovation response to the needs of stakeholders in assessing useful capital information as well too. So therefore, you can see that when you combine all these things with activities of what is going on now, you can see that derivatives, exchange derivative traded instrument it's actually very important now, and definitely you can see that it will definitely, add value to the economy of the country.
Okay, what is the launch of this derivatives trading means for the NGX, and how will it translate to a well-standardized ETDs market?
Well, the launch is imminent. Necessary activities is ongoing internally, and definitely is imminent. But what derivative, you see, the use of the instrument is critical to portfolio managers, for example. And if the value of, like what you just said about the ASI is like a portfolio of stocks, and the value has gone up. And what happened is that there are informations they can get from it, and which actually they can now use derivatives to actually protect themselves when there's a downturn. And that's where you get the values from it.
Okay, also in line with NGX's commitment to promoting the importance of market data, the 2021 Market Data Workshop theme, How Market Data Powers Investment Strategies Using Derivatives Products, is scheduled to hold on Wednesday, 3rd, 2021. Can you tell us more about the workshop and the benefits participants can look forward to?
The benefit, I'll start with the benefit first. And if you look at the theme itself, is the benefit is that it's a place where all market stakeholders come together and we basically share ideas. So it's a two-way thing that, we bring expertise in the industry from the clearinghouse, from the CCPs and things like that, and from the institution as well of researchers that are active. One thing about derivatives is it drives research, because now, and what drives research is the existence of data. So now if I have data from a reliable source from like the exchange, then I am almost confident that any model that I'm creating to do whatever it is that's going to do in this market, I can actually test it. So at the workshop, that's the essence of what we do, to stress the importance of market data in this space. So we've been doing this for some time now. I think this is the 6th one. And from even the one we had last year, where the COVID was in existence at that point in time, talk about risk management, and that's what derivatives is used for. And you can even see that based on the information I gave you about the World Federation of Exchanges, about what the addition of the increase in the volume of derivatives transaction, you can see one of the catalysts is the activities of last year. That was a shock to everybody, and all the fund managers, the portfolio managers and things like that, and traders themselves, brokers, basically have to cover themselves. And so this instrument is what they use. Now, for you to be able to understand this instrument, then you need the market data itself. And that's exactly what we're trying to do. And that's the essence of the thing that we have now, because if you have the data itself, then you can actually strategize how you're going to execute your trade, both in the cash market and the derivatives market as well.
Can you paint a picture for us how the NGX is using the extreme to position derivatives trading?
Well, that is the center. It's the tool of the market, basically. And so from the exchanges, from Extreme itself, it's a world-class technology that we use in trading, and both in trading and market dissemination of that data itself. And so, it enhances the efficiency of the market, because your transaction is done at real time, and basically the information actually even is fed into our smart system to monitor the activities and regulate the market itself. So that's what we use the Extreme to do. And it's basically what we're going to use. Definitely, that's what we're going to use when it comes to derivatives trading. And it has been configured and ready for derivatives trading itself.
Stocks have crossed the 42,000 mark. What do you think is driving the market?
Well, it's I will say activities in the market. One thing if you ask me, this is my own thought now, because I would say that if you look at there's an increase in fuel price. That is one. The dividend. If you look at there was an article about the dividend yield that was paid out to investors. That things like that. The from when it comes to policy as well too. So there's a whole host of factors that drives it. So a combination of all these factors is what basically investors put together and actually drives what they do.
What does this mean to investors?
That means is when it comes to the market data itself, is meaning to investor is now as an investor, you have enough information to make investment decision. You have more than enough information to be able to extract information from the data that you're getting. So combination of all these activities and by us providing access to this data itself gives investor the confidence to say, I have enough information to execute the trade. And you can see that this year, our official sponsor, Zenith, we have Infoware as well from the technology part of it. We have MTN, so, we have Reliance, United Capital, CSCS, NG Clearing, which is the CCP, and ARM, New Logic, and Codrus. So by seeing the sponsors itself, you know that these are part of the stakeholders. And when you can get your stakeholders to partner with you as the exchange in what you do, it speaks volume.
Okay. Thank you very much, Olufemi Balogun, Head Market Services at the Nigerian Exchange Limited. Thank you.
Thank you very much for having me. I really appreciate it.
Okay. Now moving on, next is Global Market Report.
The outcome of the European Central Bank interest rate and its monetary policy on Thursday set the tone for Friday's trading session, among other factors in the different continents. European Central Bank decided to keep its interest rate and its monetary policy stand unchanged despite ongoing inflationary pressures. However, European stocks were lower Friday as traders digested a raft of U.S. and domestic corporate earnings. Shares in Asia Pacific were mixed on Friday as investors monitored stocks of Apple suppliers after the tech giant revenue miss. Mainland Chinese stocks closed higher as the Shanghai Composite advanced 0.82% to 3,547.34. Hong Kong's Hang Seng Index shared 0.70% as of its final hour of trading, while Nikkei 225 in Japan recovered from earlier losses to rise 0.25% on the day to 28,892.69. In the United States, stock futures slipped in early Friday trading as shares of major technology companies suffered following disappointing earnings reports. Futures on the tech-focused Nasdaq 100 dropped 0.8%, S&P 500 futures shed 0.5%, and the Dow Jones Industrial Average futures were 45 points lower. Although as the figures continue to roll in, investors are optimistic the bull might take over. For Africa, South Africa's JSE Africa Top 40 and Nairobi's all-share posted gains, while others closed in negative territory. Boss said they're able. Business Express.
As Nigeria seeks to bridge its infrastructure deficit at $3 trillion, the role of the private sector has been identified as critical. These experts in the sector say as they identify strategies to attract and guarantee private investments.
We need to be working with DFI, potential funders, because they are actively looking for projects, as we have heard today from Barry and Somalia. At both the federal and the subnational level, there are loads of projects, only a fraction of which will meet the lender's criteria. So the idea of making sure that the principle of project preparation is focused and targeted rather than a scattergun approach is an element of what we are doing. And the third, which is really, really critical, and this is where our partnership with DFIs and domestic and international fund providers comes from, is access to project finance and credit enhancement.
Within our framework, we have the development core, which is going to focus on project development that would de-risk the opportunities. Even within the brownfield assets, we have to de-risk the opportunities first, and then we have the long-term investment finance company as well that will provide the project finance.
At fund manager, you really can get a nice risk-adjusted return across the different stages. And that's something that we are working on, is how do you allocate capital in the different parts of the capital stack and price it and move your way through it. Debt is always the easiest conversation, but debt alone will not build Nigeria.
Despite many initiatives in the past, poverty and inequality in Nigeria has remained on the high side at about 40% rate. What strategy should the government adopt in lifting millions out of poverty? This was the focus of a debate at the 27th Nigeria Economic Summit in Abuja. Ekene Indulo reports.
In the wake of rising unemployment and poverty, economic experts have continuously stated that Nigeria has the potentials to be among the top world economies. To begin the effort of creating a better economy for its citizens, the federal government is targeting to lift 34 million Nigerians out of poverty by 2025. Driving this process is the federal government's social investment programs. However, efficacy of a social protection approach is the source of this debate, as some experts are proposing a market-driven approach.
You cannot just presume that everyone will be able to do certain things. We need to look at the context and draw the linkages between the drivers of poverty and the outcomes. That's the only way we can support people out of poverty, get them involved and engaged in productive ventures.
The government can figure out ways to truly spur investments in innovators and entrepreneurs. Help them create markets like we've done with mobile telcos.
The whole world is suffering more than it's suffering in 2019. But I don't think there's any country in the world that is not trying to help its people with social investment programs.
The government cannot fund that. There's no fund anywhere to do that. How do we work with the private sector to unleash investment in those areas?
Even as they differ in their approach, it was generally agreed that driving Nigeria's economy to the desired level requires the collaboration of both the government and private sector.
Let's see the commodities market. Facebook on Thursday announced that it has changed its company name to Meta. The name change was announced at the Facebook Connect Augmented and Virtual Reality Conference. The new name reflects the company's growing ambitions beyond social media. Facebook, and now known as Meta, has adopted the new moniker based on the sci-fi term metaverse to describe its vision for working and playing in a virtual world. The company also said in announcing the new name that it will change its stock ticker from FB to MVRS effective December 1st. Now, Business Express returns Monday. Be safe out there.